welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's weekend show, our Broiler Chicken Show. Buck, 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 buck. Why is it called the Broiler Chicken Show? Why not? Sounded like a fun name to give a show about trading. When I was a commodities broker years ago, we used to banter about trading broiler chickens back and forth. But they never could get that contract to gain any traction in the market. So anyway, it's a bit of nostalgia for the old Beamish. But anyway, welcome back to the frivolity. I noticed that my camera, I have no idea why, I just completely rebooted before I got the video going here. And yeah, look at that. Even trying to refresh the Video Ninja page, it just keeps freezing up here. So I don't know whether we're going to be able to give you a camera today. No, completely frozen. So unfortunately, everybody, sorry, but I have no idea why. It might just be a function of my computer is really old and needs to be replaced, but I can't seem to get this this camera to share my picture. Oh, it's completely frozen. I don't know. Maybe it's a function of my camera itself. Anyway, not the best way to start off this show, and I do have to do this kind of a short show here today. So I'll try one more time to get the camera going. Hopefully, it's on there. I don't know whether Chris minimized it or not, though. But I updated it now. Yeah, if I see it freeze one more time, then we'll just give up on it. But hey, at least you know that I'm live. Hey, there you go. Look at my groovy hairdo today. Hey, at least I'm nice and bathed and ready to give Liam an awesome afternoon. Okay, so don't have a lot of time here today. I think we're probably only going to be about 45 minutes. So if anything, that probably is an indication that the rhetoric, nonsense about Brian bitching and complaining about politicians, and of course the banksters and the crookery and the hyperinflation, money masters, all that kind of barking. We'll have to keep that limited here today. Quick summary of what happened this past week, courtesy of ChatGPT. I don't know whether I necessarily agree with this write-up, but thank heavens I've got Chris here to help me out get this newsletter up and running and done. Like, geez, I'm fighting with my computer here just to see if I can get the camera to work. So thank you very much, Chris. He takes the Lotus latest sort of news headlines that caught our attention here and plugs them into ChatGPT, and it spits out sort of a summary. Welcome to Trump 2.0. It's not speculation anymore. We are now officially live. And I suppose you could argue Trump coin and everything that happened around that basically garbage shill meme coin. I don't know what's the best term to use for this garbage. This is probably a perfect anecdote of the next. Oh yeah, isn't that interesting? Oh no, it's still working. Yeah, 3E, 4EM webcam might be troublesome here today. And if I do see it freeze one more time, I think I'm just going to turn it off because it's we don't have a lot of time, and that's a bit distracting. So here we are back into Trump land. Hope you enjoy the ride. Don't take no wooden nickels. If anything, for the next 4 years, we got to watch out for your wooden nickels right, left, and center. And I also, too, am a little concerned seeing the kind of rhetoric that usually is around fluffy, toppy markets, encouraging the public, of course, to go lock in. I guess POS coins, trying to take advantage of quote unquote high yields, even though I've watched the now 3 cycles. This will be my 3rd cycle playing with the silly POS and the APR or APY or API or whatever the hell the damn term that they use to sucker the public into locking themselves in. If you are going to go down that road, just make damn sure that your lock up period expires before November of 2025. My hunch here is that the market is rallying into that cycle event, and you better be in a position to be able to just hop off. I even told people in public rants on Twitter, whatever the hell it's called. And it's remarkable to watch all the sort of minions of the world all fall in line and now start calling Twitter X. And I still don't understand why you would call a platform X. It doesn't make any sense at all. But anyway, I have officially lost a bet. Now I have to buy Chris a fancy dinner here in Sacramento in a week or two, because I am still on this idiot's platform, and for some reason I can't seem to get off of it. Oh well, see what the hell happens. And I also noticed he went and tinkered with the damn platform, and the way that I liked to having it before has changed, and probably you've got to get used to this nonsense. He's just going to slowly squeeze all those people that really don't want to pay his stupid fucking monthly blackmail to use the platform. Swear I got to get off this damn platform, and this is where I lose a lot of time and energy and stuff, so my apologies. Okay, stop with that nonsense, Brian. Let's just talk about market. So as you can see from the breadth indicator here, it does look to me like crypto maybe got itself into a little bit of trouble there a week or two ago. We did have the overbought, oversold histogram indicator flash a warning there to TRIers. I even put a tweet out suggesting, hey, be careful here. And some of our site OGs who love using this tool are like, whoa, better be careful. Interestingly enough, ironically enough, ironic, I'm not sure which. One of the names that one of our TRI principals, who I consider him actually, I would say he's an expert in the cryptocurrency space. And it doesn't surprise me at all. I mean, almost all of these names at one point or another come under the gun, and it's a question of, do they break their spine and it collapses, or do they recover and maybe go on to make new highs? I mean, this is venture capital. So the way it goes. So it turns out one of Sjord's favorite fundamental names is under the gun right here. And actually, interestingly enough, when I watch some of the videos and commentaries about what happened, if I understand correctly, the chain was operating perfectly fine. Everything was doing what it was supposed to. And then the directors of this project started to get a little bit bored last summer. And they started to do some really stupid business practices. And it got them into a lot of trouble, to the tune of about like $200 million. And if anything, ironically enough, this is an excellent anecdote for all of you traders and investors out there. We just had our level 1 program, and we're sort of breaking in a new instructor, Josh. He's been around the site for a while. In fact, he is the sort of brainchild behind a lot of these blog posts that we have recently. I think the TRI blog is a really, really good place. And ironically enough, if you actually go, Benner Cycle, Josh, you did such a good job. When you go on to Google, the Rational Investors, the #1 hit site for this. And I got to tell you, if you really want to learn the Benner Cycle and you want to learn cycles, man, this Josh has just gone way beyond his most people's acumen, to be honest with you, in really learning how these cycles work. And in fact, we had a very interesting session, like I said, with the level 1ers yesterday. because they are in that strategic planning part of the level one course. And of course, are you going to be able to like become a perfect strategic planner in 1 week? I doubt it. We've just opened the can of worms for them. Now the question is, do they catch the bug? And if they do, kind of like me, I caught the bug in 1988 and I still am suffering from the bug. So we're just opening the world of possibilities to these people. But anyway, the point that I think that we really want to drive home here is, and in the AMA document, that was a specific question we want to speak to. The questions that the level oneers have coming out of that, but sort of speak to what kind of cycle are we in? Is it a major bull cycle? Is it a minor bull cycle? And here we are, sort of working our way up this minor leg. So to actually answer the question in the AMA document, I'll circle back around and look at this. But I think it's important that we understand where we are in the bigger picture. Unfortunately, we're not in the part of the cycle that's like, oh my God, you're going to make ridiculous money. When you get into these sort of, this was kind of a funny cycle peak. 16, 17 was a fantastic bull run year. And then, through that sickness window, 2021 kind of idea was a bull year. This is not a major cycle pivot top, a minor one. So I'm not really looking for like to the moon expectations. But as I said, we'll circle back around and talk about that in a bit. It's interesting how there was a name that actually our CTO Sjord was super interested in last cycle, Luna. And ironically enough, the similarities in behavioral patterns are absolutely startling. In that Luna had an initial burst run up. Of course, I don't chase. I like the story. Started at like 50, 60 cents or something. Went zooming up to like $20 or something. Very similar to what this Rune did. And then they had a little bit of crisis of confidence, and price dipped back into reload zones. And of course, Brian steps in because that's what Brian does. He buys down markets. So ironically enough, actually, this was my buying window. Big old crisis. Everybody in the public freaking out. Everybody in the public saying, "Oh, this is the next Luna. This is going to go exactly as that Luna." And ironically enough, I go, "Yeah, actually, I think it is going to go just like Luna." In that they'll probably find some sort of short-term solution, if I understand correctly. And Chris, of course, got ChatGPT to help with all of this. If I understand correctly, Rune actually does have a revenue stream for the swaps that it creates, and the plan here is to come up over the next 90 days to figure out some way to pay all this money back that these idiots went just out of boredom when just made really, really bad business decisions and potentially could actually break the entire venture. But welcome to venture capital, folks. This is the way venture capital goes. You have to understand what you're getting involved with here. And I think a lot of people in the crypto space don't realize how risky this is. I mean, this, as a stockbroker, I would say, well, buy your exchange traded funds, or, in years gone by, we would say buy your mutual funds, right? Same sort of conversation. They are the least risky way to participate in the market. And, for lack of a better term, especially anybody watching this video that's not really too familiar with this space, there are a lot of exchange traded funds that you can buy, and now even buy in your registered accounts, that basically replicate Bitcoin price. This is half of our, conversation. Bitcoin has now been securitized, which does mean that there are a ton of derivatives out on Bitcoin now. And also, too, I would argue on Ethereum. And I'm hearing that they want to make like ETFs for Solana and all these crazy ass altcoins. I don't know. I mean, I suppose they're going to do whatever they do. And now, of course, we've got Biff in the White House again. If there's money to be made, and I can absolutely guarantee you there are plenty of cocksuckers on Wall Street that the only thing they care about is making money. Think of Dan Freeberg, perfect example. And if there's a way that they can make money, i.e., take your money, you better bet your bottom dollar with Biff in charge here. They are going to have that open gate. So you better be careful. And if anything, this is where I need to really step up my game. Because I've even noticed right out of the gate here, of course, I'm going to do this stupid thing. But right out of the gate here, I'm already starting to see this crap. You will not understand the bossy feeling. What the fuck is that talk? Oh, yeah. I mean, I don't know who this person is. I hope they make tons and tons of money and they're a total boss, whatever. This is trying to trigger your emotions. It comes when you know that your assets are not just safe on the platform. Well, what happens if you go and buy SBF and his platform? Your money's still safe there? I wonder. So I don't know where the hell they're going with that kind of talk. None of his money is safe in cryptocurrencies. Come on. This is venture capital. You want safe, you want guaranteed. I'll show you 3%. That's what we used to always say to anybody who came to the market and was like, oh, yeah, I want to buy a stock that's guaranteed to go up. No, I'm not taking any risk here. Like, come on. Don't you understand what capitalism's all about? So anyway, a little bit disappointed to start seeing this kind of talk coming back. And I'm not necessarily saying that this person's a scam or whatever. Maybe this is absolutely the next best thing from sliced bread. But what I have noticed, and I've played this silly game now in crypto basically since the inception of POS. And what I notice is each of these crypto cycles, we know that there's a spring, we know there's a summer, we know there's a fall, we know there's a winter. And I'll tell you, the fall and the winter are pretty damn ugly periods in crypto. You don't hear anybody talking about APYs or whatever the fuck they're called, annual percentage scams, APSs. You don't hear anybody talking about that kind of shit down at the bottom of the market. You only hear this kind of talk at the top of the market, where, of course, they're looking back in hindsight and going, well, if you staked your coins and you got paid extra coins and look at these massive price percentages, well, there's your 10,000x annual percentage. And of course, that's total and utter bullshit. I'm disgusted by this because the public comes in, they don't realize that these assets, these prices of these cryptocurrencies, they could fall 99.999999% of their value. And I've watched them. So not can, they do like literally lose all of their value. This is venture capital. And if you're playing things like Bitcoin, you can pretty much set your watch. And it's basically been my attitude. You've all heard me talk plenty about. In fact, actually, it's a good opportunity to do a quiz here. What is the BFF? Or anybody who took my course and is watching the video later on, years ago, I called it the line in the sand. What is the typical? You can pretty much set your watch to the market correcting, especially in something like Bitcoin, this percentage, and in essence, make it nice and easy and just round it up to a nice big fat round number. And if you can understand this, then actually playing this game is really easy. Oh, look at that. And the damn fucking camera cut out. Excuse my French. All right, I'm just going to put the camera away. So, oh well, we tried. Wasn't meant to be. Thank you, the Matador. Matador, you're over in Hawaii right now. Hey, I'm going to be there in a week or two. You should stick around. Yeah, well, sometimes, and it's 88.6, by the way. But it's sometimes asking for like 90% corrections is a bit much. Now, Hey, I did get a fill on that rune off the 88.6 level. So yeah, that one hit it. So there you go. But sometimes, and especially like Bitcoin, sometimes asking for 88.6 is that's a bit much. But definitely 78.6s. That's what I was looking for. And if you wanted to round up, keep it nice and simple. Look for 80% corrections on the Bitcoin price following the peak, and you'd be surprised at how consistent that is. So by definition, let's say if we run up to like 250 grand, then by definition, sometime through the crypto fall and winter, I would expect Bitcoin to trade back to 50 grand. And I think that's probably a pretty reasonable correction expectation. Keep in mind, unfortunately, 2027, 2028. Oh boy, this is going to be very tough. I've shown you this image repeatedly. So none of you can say, I have no idea what you're talking about here, Brian. I've talked about this at length. Also, too, if you want an interesting conversation about long-term inflation cycles, the Great Reset, I'd highly recommend you listen to Lynn Alden. Not quite sure. I'm just gonna say the person's name. Um, Regardless of all that other stuff, and I don't even know if this is the right channel or not. No, I don't think so. I can't ad lib this very well. I don't know where this person is, but anyway, I think their name is Lynn Alden. Not positive, but anyway, I know they've done some really good work in the space with regard to money flows and cycles. So maybe see if you can check that out. Maybe we can do like I don't know. I don't know how to spell the person's name. I think it's like that. There you go. That person. So do your work. I think they do a very, very good job on explaining the money cycles, money flows, and inflation. So I'll defer. You want more talk on that. And then, of course, if you want to go watch the Money Masters, that's what I would recommend anybody tune into to understand how corrupt the world's money system is, and sadly how we're all slaves to these stupid Rothschilds. But anyway, I digress. Point here is that we are expecting, at least I don't know if it's a we, I am expecting another big ugly wave of inflation here. Looks like it kicks in about somewhere about halfway through next year. This shit's gonna start hitting the fan, and you can see, oh boy, is it gonna get bad. So unfortunately, it's like how do you describe this? There's obviously going to be some sort of shock, and it looks like the shock actually comes in somewhere around February, March of next year. And then it's just a relentless surge higher here. There's also a really big shock that comes about halfway through next year, which really ramps it up. So it's like there's going to be like some sort of first shock right at the beginning of the year, and then sort of mid-year, whatever that initial shock is, it's probably going to translate into the full-blown crisis. And you can see, oh boy, does it ever get ugly. So it'll be interesting to see what our lives are going to look like over the next few years. This could be a bit challenging, folks. Interesting too. Bitcoin, I think, is an excellent forward leading indicator. You see the inflation problems we had in 42 or 2022. And of course, Bitcoin price topped in 2020 and 2021, right? So interestingly enough, you can see the absolute best picture for this inflation, the end of 20, and I suppose that would be right around sort of insurrection kind of talk. And then, of course, Biden comes storming into power and socialism out the ass, and the inflation gets going crazy. It takes about a year or so to hit its peak. and then it takes usually a few years to calm down. So unfortunately, that's what our future is. So it would make sense that Bitcoin tops, somewhere here late 25, early 26, and then the wheels start falling off the bus. Boo, hisses, boo, hisses, boo. DDBB says he'd rather have the camera on. Sorry, dude. I'm not quite sure why. What's wrong with my computer here? I did reboot and I did try to close all the tabs I could, but for some reason it just keeps freezing here today. I don't know why. But I do know that Windows is not going to support my Windows 10 operating system after October. So maybe it's just a function that I really got to update this computer and get it sort of operating in the 21st century. Anyway, that's here nor there. Okay, so point of the matter here is, and kind of on Friday we had a really excellent presentation by our level 2 instructor Murat, who I think is an absolutely brilliant gentleman. You can see this was an inflation study that he shared with the community on Friday. And there you go, folks. I mean, that's what the next couple of years in inflation wise looks for us. There's going to be some sort of really ugly shock. And then once we get through that shock and we get to the other side, then ironically enough, we probably have a good 10 years of relatively low price pressures ahead of us. But we got to get through this shock first. So just everybody should understand what we have in front of us. This is going to be a very tough few years ahead of us. Ironically enough, I've been listening to a lot of these swamis and gurus and prognosticators of world history, and this gentleman here, Master DK. He's supposed to be, and if you don't believe in this shit, I can completely empathize. It's a bit of a leap of faith, but anyway, this guy's supposed to be. I think his name is Dwal. Cool. He's supposed to actually be the one of the three wise men. He was his name was Casper, and he was always hard of hearing, and everybody joked with him about how he was hard of hearing. And it's fascinating how through various different iterations of the stories over the years, like centuries, millennia now, how these stories get passed down from generation to generation to generation. So anyway, I thought it was really interesting because I listened to this presentation by this one person. And I mean, she said she's been channeling for 40 years and she has quite a following. So my hunch is there's probably some grain of truth to what she's saying. This deity was the person who came through her. I also watched another sort of presentation on all this by the 7-Day Adventist, and they think that any voices that you hear from the other side or anything are all Satan and it's all bullshit and they're all lying to you. So I do find it fascinating how we are transitioning from the age of Pisces into the age of Aquarius. And what I found fascinating about this presentation, this median sort of accidentally dropped it. It wasn't like a direct conversation, but I thought it was fascinating that this deity actually made reference. They said that their cycle pivot that they saw in their eyes was 1221. And when I saw that, I heard it, I nearly fell off my seat. I mean, I hope you all realize that's a palindrome, right? The universe loves these palindromes. And of course, what was happening through that period, right? And that, I mean, you want to talk about a transition. I always joke with everybody. The transition was, it was a fear cycle, which meant that basically everything about our society was under question and under scrutiny, and anything that was an authority figure is under question and under scrutiny. And so as a result, it created an environment where this kind of craziness prevailed. Isn't that interesting? Oh, there he is. He, she, it, whatever. But if there ever was an image to personify a complete lack of interest in societal norms, that's got to be it in glorious Technicolor. And like I said, I mean, take it for whatever it's worth. I don't know whether you're going to buy into it or not, but this theoretically, according to Spirit, this was the pivot. 12/21, or basically December of 2021. And of course, we at TRI have been talking about how there were 6 different celestial events, all that happened, all in this window that started in 2018, 19, and goes right through to the end of this decade, including, theoretically, there's supposed to be a asteroid that's supposed to come and could very easily slam into our planet here into the end of the decade. So wouldn't that be icing on the cake? Maybe that's the hyperinflation shock. Who knows? Anyway, so this I found it fascinating when I listened to this person, and also too something else that jumped out at me, which was really surprising, was I always use this expression with people, and I have no idea where it came from, but I always use this expression with people: just keep on keeping on, right? Because that's all you can do. Wow, and just saying that brings emotion out of me. So there must be something going on there. Because it turns out that this crazy deity, this DK, it turns out that was his favorite saying, and he says it to everybody that he talks to and works with. Keep on keeping on. It's like, wow. Again, there was another thing I heard out of this. No association with me whatsoever. I'm just sitting here listening to this, and I'm like, wow, did he steal my line or did I steal his line? What the hell's going on here? It was just surprising. So, if you're at all familiar with this, and this is almost like a public plea, I even said, look at, and you all know this, that you all watch my crazy videos. I mean, I'm on this weird bent, this weird mission, try and make a positive difference in this world. And I can't think of a better way to try and help all of you. And if it turns out that I have Mr. Three Wise Man Magi whispering in my ear, and I even, I spoke directly to them today and said, look, I'm your agent. Use me. I think I know what I'm doing in the marketplace. I have a pretty good idea of how to counsel people about managing their behavior. And it's also interesting too how he makes direct reference to the fact that we as a species, we're really, really good at the whole technology side of our existence and using our thinking brain. But man, we are not good at all at managing our emotions and and I hate to say it, but this kind of crap, when, oh yeah, I want to be a boss, I want to be the man. Oh, that's all this is emotional talk here. This guy here is trying to trigger you into that. I want to be that person. All right, well, I just got to go stake all my money and lock it in. And of course, I have no idea who this person is or why they're saying these kind of statements. Doesn't mean anything to me, but this is very sort of appealing to your reptilian, greedy brain. Hey, I want to be rich too. I want to be one of those OGs, right? And all that kind of talk. Oh, 11,000% APY. That's what's going to get me rich. But it turns out they're just appealing to your emotional side, and it's a trap. Remember, your number one person you have to worry about. These people are good. Right? They're not the people you have to worry about. People you have to worry about are these guys. And the sad part about it is these guys actually take advantage of really smart young people in this space that are easily taken advantage of. Yeah, this Friedberg guy, interesting. And this guy's tried really hard to try and scrub everything negative about him from the internet. But these are the people that you have to be really worried about. And they're the people that are going to try and trigger your emotional, greedy reptilian brain and get you to go and lock in all your money through the cycle peak. And then when prices collapse on the other side, he's just sitting there laughing at you. And of course, he's got all your money. So I suppose I'm probably going to get sued if I talk too much about this anymore. But anyway, you get the idea. Um, so that's sort of what I've been sitting here mulling over the past few days. Um, and also too the fact that we are coming into well, not coming into, we are into the strategic planning part of our level one education program. This gives me an opportunity to circle back, think bigger picture, think generational cycles. Again, I'm here to try and help all of you understand this stuff. And I know it's probably extremely difficult to wrap your brain around this, but this is what I think our reality is that once every 80 years they have to go through and sort of redefine what quote unquote money is, because really money could be anything. It's just who's got the biggest guns, right? And who's controlling the politicians who control the guns, and whatever they define money is, well, sorry, suckers, all you little peasant peons, you don't get to define what money is. The people in charge get to define what money is. And quite often, what ends up happening is it's basically a vehicle of theft to keep them in control, to keep them in power, and to keep you in your slavery position. And inflation, the word inflation, is exactly that process. It's basically stealing societal's wealth. And there's not a damn thing you can do about it. And I think the tricky part about this, and this is the whole money master stuff, is I think it's convenient to blame government, but if you have a constantly rotating government base, we don't have despots in our society, thank heavens, but they only have a certain amount of time to do their damage, and once they're done, they're done. And they have to continually be reelected. So that means that they have to play the popularity game as much as possible. So, in a weird sort of way, I don't actually blame the politicians. Ironically enough, they're almost like creatures of their environment. This is the playing field, and they're just, people who decide to go into politics for a career. Well, they got to play by the rules. And if you don't play by the rules in the politics game, you don't get anywhere. Kind of like how in social media, I could sit here and kiss all the corporate butts, and I could refrain from swearing, and I could talk lovingly about all the different people on social media and stuff like that. And I'd probably be much, much further along than Grouchy O'Brien, who bitches and complains about the autocrats and the oligarchs and how corrupt the banking system is, blah, 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 blah. So the question really, I suppose, at the end of the day is what's more value? Having somebody who plays the game and is part of the system go out and buy Bitcoin and don't ever sell and stake it and lock yourself in. And, ironically enough, probably I'd be rewarded a hell of a lot more if I just towed the corporate line. Oh well. Anyway, so the point here is that this was the Great Reset last cycle. Of course, ironically enough, the bankster crooks officially took over the system right when the system was sort of bumping along, just minding its own business. Along come the banksters. They jack up, hyperinflate the economy, and of course, get everybody and their brother to go up to their tits in debt, and then just cut off credit. And of course, if you're up to your tits in debt, and then the people that you're indebted to say, oh, got to pay back your loan now. You don't have any choice. Your loan's being called. You don't have the money. Fuck you. Off to debtor's prison you go. Or in this case, Hoovervilles. Down goes the economy. Down goes society. Everybody's broke. And the banksters are all sitting there chuckling. They have officially taken over the system. The bank, and then the left-leaning politicians come out now at this point and say, oh, please turn the system back on, banksters, we'll do whatever you want. The banksters go, all right, we will allow you to borrow as much money as you want, but under our terms. And as soon as they turn the credit back on, well, the economy starts hyperinflating again. And this is the next cycle, the greatest generation. Sadly, the kids that went off and sacrificed their lives to defeat people like Hitler and actually, is there even a specific person that you label for the Japanese? I don't think so. Anyway, everybody who sacrificed their lives to fight the Second World War, God bless their souls. Those people that survived and came back, they inherited the aftermath of all this. And I would actually argue that's exactly what the millennial generation is doing right now. The millennials have now inherited this baby boomer mess. And of course, the banksters are great resetting us. And what that literally means is that the money supply is hyperinflated. And keep in mind that, ironically enough, years gone by, I used to look at this image and think, wow, did the economy really grow that much? Well, or did our stock prices stable, because a lot of times stocks are just based off of things like book value. What is the value of the actual company? All the assets, line them all up and just put a dollar value to them. Boom. Okay. Well, there you go. So if you go and fuck around with the thing that these companies are being based in, the actual currency, whatever the price quote is that what's causing this massive move higher? And unfortunately, I think that's the case, is that basically to keep the Fugazi going, they just have to keep printing more and more and more money, and it becomes exponential, i.e. add a zero onto the end of your prices every great reset we go. So the tricky part about this, though, unfortunately, is that this is like looking at the picture as if this thing was stable and this thing is not manipulable. But we all know that they've gone and hyperinflated the money supply. So in reality, the market doesn't look like that. Unfortunately, in reality, where is our cycle picture? I'm sure I got some long-term cycle pics on here. And actually, Joshua put the whole damn thing into a nice, pretty package here on one image for the level oneers. So impressed with that. I think Josh has got the idea of these cycles down, which is good to see. Here, this is just an example. This is the Canadian money supply. Look at that goddamn printing press. And it's not slowing down at all. This is why I always say Canada is a short. There's no fiscal discipline here in this country whatsoever, and the hyperinflation is just going to go on and on and on. Anyway, so here is this is now looking at the image taking the money printing into effect. So as we said, this is coming out of that particular generation's cycle, greed cycle, fear cycle. And ironically enough, what's supposed to happen here is stock prices theoretically are nothing more than just a visual representation of the happiness ratio of a society. So as stock prices are moving up, well, the demographic situation, more people are entering the economy, more people are getting older, they're making more money, they're putting their money into speculative investments. The economy's roaring, right? This was the roaring 20s. That's what they called it. Of course, the banksters wanting to get as many people into the market as possible and as leveraged as possible. And that's the only way they can take over the system, is to get everybody borrowing money and everybody into debt. Now you are all officially our bitches. Then they turn the credit off and the whole fucking house of cards collapses. At the same time, too, the demographic situation, all of those, in this particular case, they call them, I think, the silent generation. They all hit their peak earnings years, right? And they were starting to transition into retirement. Of course, the rug was just pulled out from underneath them. And of course, as they headed into retirement, they headed into a really shitty environment. But this worked perfectly for the banksters because a really, really shitty environment. You got a lot of motivated voters. And the banksters say, all right, you want to play ball? Got to play ball on our terms, right? You will borrow money and you will have to pay it back. And every time we get to the point where you have hit sort of your borrowing limit, which would be sort of here, you have to go through the process of great resetting yourself, or basically that fear cycle where the value of the currency falls, and all of the hard assets in our society, the sort of hard money kind of thinking, gold, oil, lumber, whatever, commodities, they all start moving up relative to the Dow. And that creates our fear greed cycle. And actually, a really good illustration of this, I think I just tweeted it out. And if to actually see this relationship really well, just measure the Dow Jones Industrial Average in something not currency based. How about like something like gold? And it turns out that if you look at it versus gold, and that's what this image is, we have a very long history of we're going to bid up. This is the stock market peak into the 1928-29 peak there, roaring 20s. How many ounces of gold does it take to buy one Dow Jones Industrial Unit average? So in this case, it took a whole bunch of that gold to buy one unit. Then the stock market crashes, and this is the fear cycle, and you see it doesn't take much gold to buy one Dow Jones Industrial Unit. And this just goes back and forth as we go through the greed cycle, bid growth stocks up, fear cycle, bid commodity prices up, and back and forth, back and forth. So interestingly enough, of course, I think you could actually make the argument 1928 was like 2008. I think cycle wise, that actually would have been appropriate, which actually means that had the money printing authority not been turned on, Ben Bernanke, quantitative easing, all that bullshit, just justification to print the shit out of money. Oh, geez, did I already run out of time? Damn it, that went quick. All right, I got to wind this up, folks. Can't be too long here today. So great financial crisis. They actually pivoted this through the quantitative easing. The sad thing is that they say you're not supposed to fuck with your country's money supply. So what Mr. Bernanke and what all these bankster crooks have done to us, they've broken all of the rules. And ironically enough, that's how you get something like Bitcoin, that theoretically you can't fuck with this supply of it. It goes from like nothing to hundreds of thousands of dollars. And my hunch is we're probably not even remotely done with this rally, probably millions of dollars down the road as this con job just keeps going on and on and on. Having said that, we are now into a greed cycle. I actually think that this should have pivoted here, but 6 to 1, half dozen the other. If you actually look on the sort of trend channel, you can see that pivot actually came into a trend channel line, going all the way back to the Great Depression. This study only goes back to here. So you might even argue that these lows were even a bit exaggerated, like 1-to-1. At one point, you could have bought one Dow Jones Industrial Unit with 1 ounce of gold. That's how fearful they were of the system through that fear cycle pivot. Then the greed cycle, that's up here. Then the fear cycle, that's down here. This bottom, like I said, they came in and artificially put in a bottom in the market with the quantitative easing nonsense, which means technically we could very easily have to actually come back down and test these lows. We're kind of in no man's land right now. My hunch here, for whatever it's worth, remember we are in that greed cycle, and this is measuring stocks versus gold. It's not really measuring stocks in monetary terms. It's just measuring one asset versus another. So on balance, I think that the general preference will be towards paper assets going forward. It is interesting if you actually incorporate Bitcoin into this kind of image. We're still sitting down at like single digits of Bitcoin plus gold relative to the Dow. Does that mean that we're going to transition from Dow to sort of Bitcoin standard. I don't know. I know a lot of people have been talking about that. I think for the purposes of this study, I'll just stick with this. And my hunch here is, for whatever it's worth, is this is making some sort of bullish A, B, C, D, which, on balance, what is my expectations into 2035? We should be looking for a peak of paper assets relative to hard assets. And this just goes back and forth, back and forth. The interesting thing with this is it might have to like dip down and test these lows again. And then in the very end of the cycle, it cranks right back up. You don't know with these. All I would suggest is just try and understand sort of the general, and just think about it from millennials' perspective. As they get older and they earn more money, are they likely to buy stocks? And I can already see the stock market whole story coming back to life. I mean, you see what's going on. Meme coins, I mean, I might argue that there is no intrinsic value. Keep in mind, when Bitcoin first came on the stage, this whole idea of proof of work, there was intrinsic value and, limited supply of Bitcoin. It satisfied that limited supply, store of wealth, store of value story really well. But I'll tell you, that Trump coin that was just floated, no intrinsic value, no proof of work, no store of value, just total and complete bullshit, which sadly is actually a commentary on a lot of the stock market. Keep in mind, 80-90% of all venture cap ideas fail, and most junior stocks on the stock market don't do anything. So ironically enough, I could actually see crypto turning into more of a speculative paper asset kind of proxy as we move further and further into this cycle. So anyway, long and short of it here, I am looking for the next 10 years at least for paper assets to outperform hard assets. But for the time being, until we get through this decade, I think this relationship's actually kind of stuck in a trading range. Bottom end of the range is about, let's call it 10 to 1. Top end of the range is about 21, maybe 21 to 1, 11 to 1. But I think for the time being, this ratio is kind of parked. And I would also argue that the stock market relative to Bitcoin is probably parked as well. Having said that, I actually do expect in 27, 28 to actually see stock prices of gold, stock prices and gold prices move up in unison. And actually, a study that I attached to this image years ago, not quite sure if it's on here or not, is Newmont Mining. And I guess it's not. I did an original post to this, and I even included the Newmont chart. And, if you're bullish of Newmont and you're bullish of gold, I don't know why you wouldn't be bullish of Bitcoin. But from a ratio perspective, I think stock prices are going to go up as well. Like I had sort of started off the conversation with you today, that I think you're going to see the whole damn risk market melt up here. So it's not only Bitcoin and gold prices. I think everything is going to hyperinflate here into that 27, 28 window. So ironically enough, like I said, if you're actually looking at the gold Dow ratio, I actually think it's probably just going to go sideways for the next 5 years or so. And then that inflation pressure, like we saw from our little study here, once we get into the latter part of this decade, once we're beyond, say, January of 2028, hopefully we're seeing that I guess maybe January 2029, you'll see that the inflation problem goes away. And I would argue that from this period into 35, this next cycle pivot, I would expect stock prices to outperform. If you look at stock prices themselves, with the money printing taken into account, I actually think we have a pretty good roadmap of what to expect here going forward. And I conjectured a while ago, were we going to be like a cycle, like the post World War II, which is the Great Reset. I showed you the inflation numbers from the 40s. I think that's exactly what we're replicating versus the baby boomers, which is in this purple. It's kind of hard to read small print, but you can pull this down if you want and inspect it. And then you actually overlay what is actually happening with price. And I gotta say, it sure looks to me like we are following along the greatest generation, the post World War II generation, very closely here. So, if we're actually thinking that, well, this isn't a bad roadmap to use, well, you see this. I'm not going to fight this. Now, I think what ends up happening here is I think, there is going to be this inflationary push. And then unfortunately, I think when we get 27, 28, I actually think that there's going to be a top in the commodities markets. I think there's going to be a top in the real estate, like commercial real estate market. I think there's going to be a bottom in the interest rate market. Interest rates are going to start to move up appreciably. And I think that's what this window is here from like 27 through latter part of 28 into 29. I think we're going to have to go through a year or so of real ugly while we deal with that inflation problem. Then I think that commodity prices break in earnest, and you can see coming out like even into 2029. I think we're going to start marching our way higher than early 30s. Usually, they say recessions happen in years that end in eights, nines, zeros, ones, and twos. This would be a pretty good example of that recession in 32. And I think it could be kind of ugly. You'll notice that from this rally peak, once we get this rally done, over the next year or two, I think the market, it's going to like head fake down, head fake up, then come back to the original, then head fake up, then come head fake back down. At the end of this whole period, you'll probably notice that prices of the major indexes are basically where we are, at the end of 2025 here. I don't know what we're going to be at the end of this 2025, but it does look to me like the stock market wants to move up here. Then also just sort of reiterate that kind of thinking. If we look at the January barometer, which is a sort of a handy little guide for us to keep in our back pocket, I'm sure he's got it in his front pocket, but I was expecting a nice back and forth kind of market state here. First day, first week, first hour, all that kind of stuff gave us sort of indication. Look for a bump and then look for a pullback mid-year. But, as it stands marching through this first month, we ain't getting much of a pullback here. You can see beginning of the year, and I think this is sort of like January, March, May, June. But look what happens once we get about where's halfway? Yeah, there's the 15th right there. Look what happens the back half of this year. Everything just goes fucking crazy to the upside. And I've been sitting here with everybody Monday, Wednesday, Friday. We have our videos, right? And I'm sitting here going, okay, maybe that's the pivot. And then, okay, maybe that's the pivot. Okay, well, maybe that's the pivot. It does look like we're potentially putting in a 3-bar fractal here. So maybe if we close week or open up week here tomorrow, maybe we do start getting our little seasonal pullback that we should see in September, October. It always happens. But the point here is by the end of this week and into the beginning of next week, we're going to get a pretty good idea of what this year ought to look like. We also have the Fed coming up here, middle of this coming week. So to see a bit of a pullback into that would be probably a good thing. And then also, too, if I understand correctly, Mr. Trump's still spitting out all his, I'm going to tariff this, I'm going to tariff that. This is now illegal. That's now illegal. So everybody's humming and hawing about what the hell he's going to do next week. And also, too, we have a whole bunch of corporate earnings. And we have noticed something that jumped out at me, which is a bit surprising, was when I was looking at the semiconductors, sort of getting ready for our conversation today, I noticed that our buddy NVIDIA, and I suppose this is the biggest, baddest semiconductor, and if semiconductors are the ultimate leading indicator, blah, 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 blah. Remember, we've got earnings. We're entering their earnings season. I'm not sure exactly when this guy reports. I thought you could put earnings on here. Anyway, I know I can. Oh, there you go. There's D. There's E there. So I guess earnings into all the way till way over here for this guy. But I guess so maybe it's not the earnings that's driving this, but I was pretty surprised. Who can tell me what that is? And that's a very well defined one of these. And it seems to be coming in right where previous tops have come in too. So it's almost like there's somebody, and anytime this thing gets up to about 145 bucks a share, sell, hit that fucking bid. So, I mean, if we open up, tick lower than this low, that's an outright sell signal unto itself there on good old NVIDIA. So, that's what's staring us in the face. And so, is it realistic to maybe think that maybe the stock market needs to come back down here, complete that sort of January barometer study? And I guess what I'm thinking is it almost looks like to me the first hour is kind of our roadmap here, where we've been grinding our way higher. And are we kind of like right here now? We've got to go through a bit of a pause. And then the end of next week, beginning of the following week, will be the end of January, which we should see a bit of back and forth following the Fed announcement. And that'll tell us what the end of the year looks like. So, put it together. NVIDIA's looking a little toppy here, and it's like ultimate leading indicator. And stock market does look like it could use a bit of a pause, 3-bar fractal, all that kind of talk. Pretty overbought here. And then, of course, so add insult to injury. What is good old breadth telling us? This breadth indicator works absolutely perfectly, just as a sentiment gauge. And that's what I told students yesterday in class. You don't necessarily need to be an expert using this right now, especially if you're a level 1, but you just need to understand the slow indicator for the broader US stock market actually has officially gotten overbought. Now, do we have to do one of these kind of rolling tops here and get everything oversold again so that we can actually get some sort of tradable bottoms coming in here? As long as I see that image in the stock market, that's a big slowdown. So hopefully you can see NVIDIA putting in a bearish outside downside key reversal and our breadth indicator looking like this. You're getting a lot of anecdotal evidence here. Slow the fuck down, people. And of course, like I said, we got Fed coming up here. And usually, what I think is going to end up happening here is, Trump's going to be like Mr. Good Cop and say all the things that the public wants to hear. And the Fed's going to be the bad cop. And they're going to say all the things that that the public doesn't want to hear. And ironically enough, Jerry's leaving in a year or so. And my hunch is that the market will stay relatively firm until Jerry leaves. As soon as they put a new person in charge of the Fed, that's when the market will break. So if you want sort of a official when does this bull run sort of come to a fruition and start approaching an end, well, just wait for Jerry to announce his retirement. And as soon as they appoint a new person, the rule is that as soon as they appoint a new person, that's when they're going to test them. All right, finish off the conversation here today with a little look at the old corn. Obviously, I've given you what I consider to be a fairly bullish report here for the year of 2025. Should it surprise us that Brian's thinking uppy here for Bitcoin through 2025? I don't think so. Of course, our seasonal study, this works really, really well. I haven't updated this picture, but actually, I suppose I could have showed you all the Newmont charts and stuff I was talking about from here, but you all know the 4-year cycle for money. So this is the older picture I have. Oh no, actually, look at that. I did update it. So you can see, we are in the friendly part of the money cycle. I wouldn't fight this. At the same time, too, this is the money picture. Could we use a little bit of a backup here and maybe clean things up a bit? Ironically enough, I wouldn't be surprised if the Fed just sits here and goes sideways for the next few months. Wouldn't surprise me at all. I mean, you can kind of see how they came off the lows here and then they just parked themselves sideways for quite a while. I don't know what they're going to do. I will say, though, that Mr. Powell is not really Trump's best friend. And last go round when the sine wave turned up and Mr. Trump was even barking, why are you keeping interest rates as high as you are? You can see the sine waves moving up. You should be lowering interest rates. He's already saying exactly the same things. And the Fed did absolutely nothing until they absolutely had to do something through the sickness. Do we have another sickness? The avian flu seems to be doing its thing. I don't know. My hunch is, all these alien shit. That's definitely a trigger. Is it connected to the wildfires, to the crazy fog? Is it connected to Jeff Bezos's boobs? Who fucking knows? Does it? No, it's not Jeff Bezos's boobs. It's Jeff Bezos's fiance's boobs. I thought it was hilarious listening to the lady commentators chime in about what a fiasco that was. I mean, yeah, can you blame Zuckerberg? I mean, he's a young man. He's full of piss and vinegar and testosterone. I don't think you can blame the guy, but man, was that ever hilarious. So, cats and dogs are officially living together. Fucked up world. But anyway, we should be in a growth friendly part of the cycle. I'm seeing a lot of little junior stocks all coming to life. So, us is seeing venture cap in the form of cryptocurrencies doing well. Why not? I mean, it just seems logical. And if anything, what I'm hearing, anytime I hear people talk about, oh, this is the top, this is the top, then I know that actually it's probably crypto's a buy. But if I start hearing, oh yeah, we're all going to get rich, oh, we're going to get rich, moon, 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 then oh boy, better be careful. That probably means things have gone too far. In a weird sort of way, with regard to Bitcoin, I do like Tom Lee's kind of thinking here. And that's sort of what Wall Street pundit target Tom basic, and I think he's a pretty smart guy. He said he's looking for a top up around 250 at the end of this cycle. But he also said there's a very real possibility that we have to come back to 60, 70 G's. And I kind of like that thinking. Wyckoff check, basically, 50% retracement of this entire move back to trendline support. I think there's a lot of reasons to look for that. This would be a classic Elliott wave, 1, 2, 3, 4, 5. So 3 is usually the biggest wave in the Elliott wave sequence. And I wouldn't even be surprised. I remember in the, I can't remember whether I think it was the 2021 cycle, even Goldman Sachs started coming out and talking about the Elliott wave cycle and the way that this should progress. So we should start hearing from Goldman Sachs's Elliott wave people about this, because I do think that that's how this is going to play out. And you'll know that we are full on Elliott wave if we have a bit of a correction, then break out through this high and through this high to high trend line. Then, we're off to the races. We should get a half decent pullback here. And what I've simply done here is the Ides of March. I like a pivot through that window. Might be following the Ides of March. I don't know, somewhere around that window. I like a peak, ironically enough, into my birthday window. And then, of course, we all know when we get around Brian's birthday, odds are you should be looking for some sort of top. Usually the seasonal bottom comes in somewhere around the July 4th holiday weekend. Americans start to feel a little bit better about themselves. All the tax loss selling countries that have their tax loss selling deadline June 30th, they all get done. And then we go into that funny summer season. Everybody's in mom's basement, all ready to lose a ton of money in crypto or make a ton of money. Who knows? And we get that final fifth wave. Interestingly enough, though, as I said there a moment ago, usually wave 3 is actually bigger than wave 5. So like 1, 2, 3, 4, 5. So we'll see how this goes. I don't think we actually, I don't know where the hell this comes in. I mean, hell, maybe we go all the way up to 1.618 there. I don't know. What I would say though, and this is the way I'm looking at this right now, I noticed that like previous cycle, if we, how did I do this? If we did the 1.618s off of this one right here, I think. So this range here, 1.618, we got up into that level, and then we actually blew all the way up. Interesting how we hit 4.669s. I remember Kevin, his target last cycle was this 4.669 kind of idea. I don't know if we start doing those kind of numbers off of here. We're starting to talk some serious nosebleed numbers. So I don't know, but I did draw this 1.618 study. Uh, I can't find it now. What the hell? Oh, maybe might be because I had to change this to. Oh, because you know what? I think I did this on the laptop. Oh yeah, there it is. No, no. Okay. Well, anyway, I'll have to articulate this further. I can't do this. I'm running out of time here. Actually, I'm already late. Fuck, I gotta get out of here. So anyway, point of the matter here is I do like we are basically into a resistance point. If you look at the weekly charts, we're starting to paint divergences here. So MACD is already flashing major warning signs. RSI is as well. Willie's stupidly overbought, so we're not allowed to be buyers here. If anything, I like the idea of a nice seasonal pullback here, somewhere into sort of that Ides of March. There's supposed to be some eclipses and stuff that happen in here. So I am looking for some sort of pullback. I don't know. We'll see what happens. Only time will tell. I put out on Twitter, hey, as long as we keep making higher highs and higher lows, it's a bull. So I'm not going to be the one to step in front of this. Having said that, there's no way in hell I can buy that. So just got to leave it alone. And if anything, that's exactly what I'm doing in the crypto space. So couldn't buy something like that, but hopefully you'll notice. And I think we'll just leave off with this. I have actually been doing some buying. And this rune's a really good example. I buy down markets. So this thing went zooming up. There's 78.6, there's 88.6. And what a big surprise. Brian was in there, got filled on a stink bid on this guy over here on that day right there. And I got filled on my second buy order at 88.6 at 207 on Kraken. This is Binance. So I'm in there accumulating. I buy reload zones. Is what I do. I don't think that should surprise anybody. Has this thing actually bottomed? I don't know. Usually, and I've told you this repeatedly, usually what happens when I find is, slowly the damn thing bottoms off of that 78.6 and you look back in hindsight and you're like, woo. I think you could make the argument on a daily. If we trade up through yesterday's high, that will be a confirmation of an inside bar reversal. And we haven't done that. So you can see inside bar, we trade up through that high, then you'll know that this is some sort of short-term railroad tracks bottom. But I'm not in a hurry to call bottoms here. My hunch here is this does like V bottom. So that's your atom. Then maybe a month or so goes by. We're going to come back down, test the lows. We'll make some sort of W, and you get that Adam and Eve type setup bottom, which means you're allowed to go and nanny nibble, knife catch, very small trades. You saw what I was doing, 78.6, 88.6. But I can't really reload in earnest and start looking for big face rip rallies until I see something like this. So this could take quite a while to finish correcting and ultimately bottom. Not in any hurry here whatsoever. But I've got stink bids working all over the place. I think I shared on the site, and people have been asking me, and I share it with them. I've got buy orders. I've got a list of like 20 or 30 buy orders. And here's a cute little one that got filled. You never know when these damn bids will come in. But Brian, he loves his reload zones, so it shouldn't shock any of you to see this. And of course, I don't know, what's Brian said about something about price gaps? Does Brian like to work orders at price gaps? So, yeah, not a big surprise. Brian is in there buying when they're crying. You guys are throwing this stuff out with the bathwater, and my buy orders get filled. So that's just the way it goes. I'm not guaranteeing anything. I see somebody over there on YouTube going, "Oh yeah, I joined you. I bought the." If it goes belly up, then it goes belly up. That's the capitalism. This is the reason why I have my 2 rules of investing. If you don't know what my 2 rules of investing are, then I strongly suggest you get your butt into the school program and let's teach you how to look at the market like a professional. Ironically enough, professionals, they buy down markets. I have to force myself to come in and buy against the bottom end of range. Is this the low? I don't know. Maybe. If this thing doubles, so you can see I bought at 4. If we get up and test these highs, for damn certain I'm going to be letting half of that go and booking a risk-free trade. It's just what I do. So, this is another example. Both of these are perfect examples of Brian coming in and buying the bottom ends of ranges. It's just what I do. And by the way, actually, interesting point to leave off on here. You can see based on A, B, C, Ds, I still am actually looking for this rune to trade a bit lower here. I don't think it's done. So as I said, the only way I'm going to say this is a screaming buy, you got to get in there and buy, is if I see our Adam and Eve or Steve or Olga or whatever you want to call it, some sort of sauce or bottom here to mark the floor. So, I'm buying when everybody else is crying. It's what I do. Okay, I think we're going to leave it at that. Oh, look at these little guy perking up here. Oh, hello. There he goes. There's a good example. Just buying against the bottom ends of ranges. I don't know what's going to happen here, but I'm long. Wish me luck. So, all right. Have yourselves a great rest of your day. Wish Liam and I luck on the road. Slow and steady wins the race. PMA for the win. Don't take no wooden knuckles. Remember what your number one job is. And the only thing left to say to you good people is a hearty bye for now.